morning, our high esteemed clients. We appreciate you for always being there for us. So thank you for joining us this morning. And we promise to make it to be a wonderful section this morning, whereby we give the insight to both the equity market and the fixed income market. So we are welcome. So this section this morning will be having two, comprises both the fundamental and the technical of the market. Last week, we spoke more about the fundamentals, looking at the results that were released to the market. And then we now compare using the industrial average sectors to sectors. And then we made recommendation based on the result. But this morning, we are looking at some technical analysis of the market, how the market has performed, then the price action, the price movement, sectorial performance, how we can maximize opportunities that are available in the market. And then on the global scene, what is the impact of the US election on Nigerian capital market or Nigeria as an economy? So we just discussed briefly on that, but we promise to have a more detailed and a robust sections on that, whereby we'll be projecting 2025, what we should be doing, what we are doing as a company, the product that we are bringing in, then what we are telling our clients. And we are already ahead. We have seen this. Thank God for the more wonderful management that we have. We have our lead dollar fund already rolling and doing fantastic well in the market, topping all others. No more than a year, we're already on top, and we promise to do stronger as the year goes by. So let us just have a brief of what is happening in the market based on yesterday. And to make it to be more clearer to us, last week was the 45th week of the year. So that means that out of the 52 weeks that we are having, we just have 7 weeks left out of the week. But out of those weeks, the players still dominate the market. The 24th week of the market were bearish, and why 21 week of the market was bullish. That means that to date now, the bearish still rule the market. So they are 24 weeks out of the 45 weeks of the market. Let's move to the next slide. So the market turnover last week was 647 billion. What 75 billion of shares were traded last week, and we saw what happened in terms of week to date, that the market depreciated by 0.2% to close to a 97.23 basic point, and the market capitalization for last week was 58.92 billion. And out of our sectors that we cover, 4 out of the 5 sectors were ended positive last week. The NGS banking did 2.8%, oil and gas, and then the manufacturers and the insurance, the industrials, the consumer goods section also did positive last week. And year to date, what we have year to date was 30.04 year to date. That is what the market did last week. And let's move to the next slide. We will not be doing any more of that. And from that, this is where we are starting from. If we can look at the analysis of the market, what the market has done so far, we have seen that the support level, based on what happened last week, the market seems to be touching that resistance level. And if there are no more stronger information, we have seen the Q1, that if there are no stronger information, that means that there's a possibility of the market coming down again to 22 level, which we are not expecting. But based on the result that we have seen and what will happen this week, we tell us that are we going to have another, that the support level is now going to be what? The resistance level. But based on this week, now we are in a major crucial week of the market. That will tell us the direction that the market is going to go. Based on that, the support level, whether we are going to break that support level or the market is going to have an upward trend from that level and is going to pick up based on the results that will be released in the market and what will be happening in the market based on that. So let's move to the next slide. So briefly, I will be telling us that let's see what happened from January. Let us look at the sectors. So once you can understand sectorial performance, we can now take position. January, we saw what happened. It was the industrial sector that topped January, and consumer sectors, insurance sectors, oil and gas, pension, banking up January. So for us, we told our clients January that take out your capital from industrial sectors, the likes of the Dangote Cement, OR Cement, Dual take out profit. You are already on top. We thought that last year it was the industrial sector that was at the bottom of the ladder, and we advised our client that took that decisions and they took their capital from there. And we saw what happened February, March. We saw what happened. Industrial sectors was still topping. Let's move to the next slide. So April also, we saw what happened, and we have seen that market has started a lot of policies, government decisions, everything starts rallying around. Let's move to the next slide. So June, what happened? July, we saw the industrial sector still on top of all the other sectors that we have seen, and the CPI, that is Consumer Price Index, as at that time, that is the inflation was 32.15, and we saw that the insurance sectors, the pension, they were below, and the banking sectors. That is when we advise our client that let's take position. This is an opportunity. So what this is giving us, the technical aspect of it is that, okay, you will know which sectors to play in, to key into, where are the opportunities. And we saw, if you look January, the oil and gas sectors was below the inflation rate, and we advise people to take position. That is why in our recommendation, we told our clients, we recommend Total, we recommend Seplat, and that January we told people based on that performance. So this is what we have on that. We have to look at the technical aspect of it and the fundamental aspect of it, and we key into it. And if we can go back, let us go back to January and let us see what happened. That in January, the oil sectors was 19.96. That was an opportunity for anyone that want to take advantage of that sector then to have it in. So what we are doing is that we see where to go, and once we are there, then you are now looking at the fundamental. What's the average of that industry? There are any per shares, there are PE ratios. You can analyze that. Okay, these sectors you are key in, and if you see January, the oil and gas sectors was 19.96, and let us now go back and see what is now happening currently in the last quarter. Let's see what is happening. Now, the oil and gas, as today now, is now top. So for people that have taken that advantage, that we have recommended the stock that we recommended to our client and they took that decision, we have seen that oil and gas sectors have outperformed every other sectors. And we saw that insurance, part of the stock that we recommend also, are now second in that performance, comparing them to other sectors. So let us see what happened last year. If you see what happened, so let trend, let pattern be our guide so that we know what to do. Last year, oil and gas sectors were at the top of all sectors last year. That was last year, what we see October. And we saw that the same thing play out in this year, also October. Oil and gas are what are the top of it. So we know when to come in and when to go out. Let us see what happened to the banking sectors. When we told our people to buy into the banking sectors, it was in negative, and people that bought at the right price make profit. So why are we combining this? That we know at the technical aspect of it and the fundamental aspect of it. We're not just recommending, there must be a right entry point. So there must be a time that, okay, this is the right time to come in. Then we now analyze based on that sectors. Okay, the average sectorial performance, the earning per shares, the P ratios, and then we now go ahead. So let us move. So these are recommendations, and it's both comprises of both the fundamentals and the technical. So this is what we did for the banking sector, the recapitalizations. We came out with our well-detailed research analysis on the stocks, and Access Bank, Fidelity, GTB, FCMB, Senior Bank, and Stanley. We recommend that people should buy. And people that bought in are now in profit based on our recommendations. And also, First Bank now is doing their rights issues, and we are recommending strongly for our clients, for people that are already shareholders, to take advantage of that opportunity to buy in. It's a good buy. It's at top of our recommendation that people should buy. Because of our time, let us move to the next slide. So results were released, the Q3 results were, and all the banking sectors, their performance has been so fantastic. Let's move because of our time. Total also, the oil and gas, the performance, the coin oil, every one of them did wonderfully well. We read much on that last week. Let's move. So this also comprises of the results. So we are combining all together, looking at the technical aspect of it, looking at the fundamentals, the performance, their earning per share, their P ratios, and then we recommend this an advantage, this opportunity. This time for you to hold, this time for you to buy, this time for you to diversify into other asset class investment whereby you preserve your profit. Let's move to the next slide. So Custodia also, UAC, their result was fantastic. NEM also, the result was also good. Let's move to the next slide. So for us this week, all our recommendations are still valid. Access Bank, First Bank, GTB, UCAP, UBA, Stanley, Stanbic IBTC, their performance has been wonderful, and we recommend based on the earning per shares, their P ratio, we compare it, we average, and we see that they are worth buying. So First Bank is good to go. GTB, UCAP, UBA, we recommend all these stocks for us to buy. We have sent the recommendations via our platform, and we also make sure we follow up calling our clients on when actions. So for Dangote Sugar, Guinness, Nestle, Coinol, Airtel, MTN, they are own, and the recommendation to sell this week is Cadbury. So our expectation for this week, we saw Wando releasing their results. The results were released last week, and the profitability timeline was also increased by 50.67 to 2.0 trillion year on year, and the bottom line was down by 44.265 billion, that down by 75, increase in finance. We saw the results based on their performance. We saw that their production was reduced compared to what they did earlier in 2023, and that has also affected their top line. At the end, it was profit before acquisition of assets that have increased their finance cost and has an impact on their equity earnings. So we do not rule out possibility of profit taking, as people will be taking profit as a result of good result and increase in prices. People are selling out, taking profit and investing in other asset class. So projection for this week is that the market also will move from what we saw last week, and it will go bullish this week. So our expectation for the week that the market will be bullish as a result of good result, that people want to be taking position against the last quarter result that will be posted on the last quarter that will be released at the end of the year. So for final payment, people will now be positioning so that they can enter at a lower price and then take advantage of the market. So our expectation for this week is that the market will be bullish at the end of this week. And for the US election, we saw what happened last week, that Donald Trump became the 47th US president, and that has really impacted on the market generally. And we saw for the first time that Bitcoin also hitting to the highest of $80,000. And what will that be on the Nigerian market? And we saw what he has said already. There will be more cuts in taxes, and then there will be more production. So that means that US dollar will be more stronger in the year to come. So this is an advantage for that have not taken position now, lead dollar fund, that they should maximize that advantage to come in now. Next year, we are going to see a more strong dollar performance next year. We know what happened. So compare the Republican and the Democratic during the Donald Trump, there are more inflow into Nigeria, and we saw that also will play out today, because what he said during the campaign is that he will make sure that there are more cuts in taxes, that people should have more money to be able to enjoy. I will also see that there will be more money coming to the developing market, and then also banks also will see that opportunity to borrow at US because the interest rate will be lower to come invest in emerging markets, and that will be the impact. So for us, we know that we favor the market, the banking sectors and the insurance sectors. We take advantage of that, and our asset, this is an opportunity for people that are not positioned themselves in our lead donor to take position. Thank you. I welcome my colleague, Mr. Tayo, to hear more what of our product concerning the fixed income market. You're welcome, Mr. Tani.
Thank you very much, Mr. Amosu. Good morning, esteemed listeners and investors. I'm Akiemi Omotayo. And just my colleague has said earlier, I would like to reiterate it is never a bad time to access the market. And you can also access this market using a wide array of fixed income products, ranging from a lead fixed income fund, whose objective primarily focuses on capital preservation and growth, with a 70% investment in high quality fixed income instruments and 30% in money market instruments. The risk profile on this fund is low. Dividends on this fund are also paid biannually with a minimum holding period of 90 days. It is also worthy to note that unit holders have experienced over 100% growth in their investments since the inception of this fund. We also have our lead balance fund, who's, who has a balanced approach towards capital preservation and growth by diversifying across 50% investments in high quality stocks and 50% in money market fixed income instruments. The risk profile on our lead balance fund is minimal, and the dividends are paid biannually. Minimum holding period of this fund is 90 days. For our clients that have the objective in capital preservation and growth, and with guaranteed returns and are looking for tenors ranging from 90 to 65 days, we implore you to subscribe to our lead Gavel portfolio. We are showing competitive rates that surpass standard bank deposit rates. And for our clients that also want to hedge against the depreciating naira, you can subscribe to our lead dollar fund with a minimum subscription fee of $1,000. The risk profile on this fund is low. Dividends on these funds are also paid biannually with a minimum holding period of 180 days. It is worthy to know that the fund allows its subscribers to access the Eurobond market, which they would not ordinarily be able to access due to the minimum threshold of $200,000. For our clients and investors that have potential of meeting that minimum threshold of $200,000, we implore you to subscribe to our lead Eurobond trading platform. This platform allows our subscribers to access sub-Saharan Africa and corporate Eurobonds like Angola, Nigeria, Fidelity, and so much more. Funds on this platform are paid biannually until maturity. That being said, we move on to our question and answer segment. You can indicate by a raise of hand icon or also by typing your questions on the chat box. Thanks for your questions and answers.
So the floor is open for questions, if there are questions.
Okay, good morning. Please, what is your take on Paradel? Will it return and to intrinsic value? Because to me, it doesn't sound like a good equity to take position.
Okay, thank you. Even from our recommendation, it's part of our recommendation. We did more on that. There are any per shares and our expectation. They declared 8 naira as an interim dividend, and they have been consistent, and we saw their results. The only thing that the setback they had was the federal government, the bid that they want to acquire. That was just the setback they had. Our expectation is that based on their record, their antecedent, they have been consistent with their dividend payments, and they have a sound management team, and their results, their performance, their production has been fantastic, both on the upstream, the downstream, the midstream. They cover the sector, and they are facts behind the figure. They also tell me that they are also going to refinery now. So they have what it takes, not just to increase their top line and also to reduce their bottom line. They have been performing wonderfully well, and we believe they are good stock for our client to buy. So it's part of our recommendation. We still believe it is good stock for our client to buy. It's part of our recommendation.
Okay, we have Mr. Oluwaseun Oluboyo asking, good morning, what is the minimum investment for our lead dollar fund? Thank you very much, Mr. Oluwaseun. The minimum investment is $1,000, $1,000 to subscribe to our lead dollar fund. Thank you very much.
And to speak more to the dollar fund, I strongly believe, and we are recommending it to all our clients, that this is a very good, it's a career movement for anyone to invest now in our lead dollar fund. I remember when we started last year, when the lead dollar fund the dollar was around 800, 900, and we have seen what dollar is currently now. And year to date, Naira has lost 70% to dollar. And we believe that next year is going to be more stronger. So we advise our client, if you have not taken position, this is the right time for us to come into our lead dollar fund. And comparing our lead dollar fund to our peer in the market, just after 1 year, we are on top of that in our year-to-date return. We have done above 10% year to date now, and which is more higher compared. You cannot even have that even in US. The interest rate in US now is just 1 digit. And what we are doing now, we are doing 2 digit on our lead dollar fund. So we advise our client, this is the right time for us to take position in our lead dollar fund. Next year, we'll see a more stronger US dollar in terms of production, in terms of people having more fund to invest in. So for people who have not taken position, I advise us that this is the right time for us to take position in our lead dollar fund. So the floor is open for questions. You can signify by raising up your hands with the icon. Okay, you have the floor. Mr. Adebola, you are muted. You can speak, sir.
Yeah. Good morning, everyone.
Good morning, sir.
Yeah, thank you for the good job. But please, I want to ask, okay, 2 questions. The first one is that, can we have this recording in case we miss it? Can we have this
Yes, sir.
recording
Yes, sir.
of
We
this,
send it. Yes, sir. We send them out every week, sir. After the presentation, we send them out with recommendations.
recording?
We send them out,
No,
sir.
the
Immediately
recording.
after the.
I mean, the recording.
Yes, sir. We send it out, sir.
So you mean I will have a link in that mail to listen to everything we have discussed in 30
Yes, sir.
minutes?
Yes, sir. Yes, sir. Yes, sir.
Okay, I'll try and go to it. That's about number 2. I don't know if you discussed about insurance recapitalization and the prospects in the insurance sector. And if you look at the prices, they are in the area of penny stocks. I don't know if you are looking at that, or if you have a presentation on that, or if anything is coming up.
Yes, I believe
how
people can take it. Yes, based on antecedent and history, we know that the first is the banking sector, then the insurance sectors also will come up with their own recapitalization. And it has been a recommendation. We saw in an high interest in environment, the insurance company, their performance will be great, and we have seen that across the board. The insurance sectors, they have performed where this, so there's possibility, a strong possibility that the authority in charge, they also we come up with their recapitalization. And this is an opportunity for people to take advantage now. If they are not able, we can see that at the end of the day, can be merger or acquisition of other insurance companies that are unable to meet the statutory requirement. But for now, we believe that the insurance sector is one of the sectors that we can take advantage of. And we have seen, based on what we did in our presentation, that top sector now is that top 3 insurance sector is part of it as a result of good results that they have posted for their last quarter. So it's good to go. Based on our recommendation, we recommend some stock from insurance sectors. So that sector is a sector that we can look into. So we have a question here. I strongly feel you should help us on the. So thank you for the question. So we are working on that also, that not just to focus on NGS alone, we cover other exchanges. So we'll be doing that subsequently, so that our recommendation is not just going to be based on NGS alone. We look at other platforms, and we also come up with recommendation on other trading platforms. So Lasaco, they have released their Q2. I believe Q2 result has been released. I've not seen that Q3, but Q2 has been released. They were on suspension, but they have released their half-year results, and it was fine. So their quarter three has not been released for now. The UBA dividend was due for 22nd of October. I'm here to, okay, ma, I will reach out to you, ma. I have your name, ma. I will call you after the program, and then we contact the registrar for the update on the dividend payment. Why the delay? So I will give you a call, sir. Thank you. So this floor is still open if there are questions. So the information I just got now that LASECO, their result is out already. Their quarter three result is also out, and their unit per shares is 0.75 compared to what they did last year was 45 kobo. So it was a good result also. So their quarter three result is out. So the quarter three result is also out for LASACO Assurance. There are no more questions. So if there are no more questions, we really appreciate all our wonderful audience for their engagement. We really have the wonderful section. So we appreciate you for joining us, and we hope you have a wonderful week ahead. So thank you for joining. Have a blessed week ahead. Thanks.